Hello there, and welcome to the Kluge Wealth Advisory Group Client Connect video for January 2026. It's a Happy New Year, and I hope all of you and your loved ones are doing well, and we'll look forward to connecting with you here in the coming days and weeks. Before we get into this month's client video, there are a couple of housekeeping items I wanted to touch on. The first is that in terms of our webinars, we're going to be moving to more of a podcast style interview style for our webinars. We noticed that most of the consumption of the content of our webinars was being done in recording, and I think we can actually increase the production quality if we were doing it as a podcast versus as a live recording. So again, always happy to hear your feedback. If you have a particular point you'd like to share, please share it, and I would love to hear from you. Second thing I did want to bring up is that we are in 2026, and that means that 2025 tax packages will be delivered to you as soon as possible as we have the information available. Please note that we are at the mercy of the issuing institutions in terms of generating slips, and they do have a legal deadline of March 31st before they have to deliver. So we will get everything to you as quickly as possible, but please bear with us as we want to make sure that we are delivering a complete and accurate package to you. Very near and dear to our hearts, talking about tax. Just a brief reminder for those of you out there who are still working. The RRSP contribution deadline is at the end of February. So please make sure that if you do want to make an RSP contribution, that's done before that date. And then finally, I did want to bring up here the fact that there was a data breach at the Canadian Investment Regulatory Organization, or CIRO. Approximately 750,000 client records were compromised, including my own. As well, there were also advisor records that were compromised, including my own. So I've been double touched in this. We were only recently informed about this in the last couple of days through a letter delivered to our office. And if you are impacted by this, please expect a letter from CIRO in the mail over the next couple of days if you haven't got one already. The only thing I wanted just to bring up is that if you do receive a letter from CIRO, I highly recommend that you do take them up on the offer of the free credit monitoring and the identity theft monitoring, because the information that was stolen was quite substantial. And then also, as a best practice, and something I've done myself, is just change all the passwords you have to your email, to your online banking or credit cards, as well as to any travel reward points, like for instance, air miles or Aeroplan, just to be on the safe side and make sure that you're not subject to some sort of a fraud. Now, if you have any questions on this or any of the other points I brought up here in the housekeeping notes, please reach out, give us a call, and let's get right into the rest of our video here for the month. In this segment of our video, I wanted to take a brief moment just to remind each and every one of you that the Kluge Wealth Advisory Group is not just about investment advice. We've been talking a lot about geopolitics and investment advice here on these videos over the last year, just given the plethora of headlines. However, we ultimately are also here to provide a comprehensive wealth solution. I mean, we have developed and refined a process that we call the Wealth Roadmap Formula to help you make financial decisions and address life's critical financial events. We have a lot of resources on tap, whether that's internally to the team, which you're going to hear just a little bit more about, or with Wellington Altus, with our advanced wealth planning department, or through our external partners. So we are here to help in this regard. And please, if you do have broader financial planning questions, we are here to help get that job done. Now, I also want to take a moment in this segment to reintroduce the team a little bit. There's been a lot of professional development, a lot of growth inside of roles, and I want to make sure that everyone's caught up on where we're at. So I want to start out here just by reintroducing Scarlett briefly. Scarlett joined us back at our other firm as an administrative associate, but over the last couple of years has taken on an expanded role in financial planning within the team. She has been working on and has very nearly completed her QUAF designation, which is a precursor designation to the Certified Financial Planner, or CFP. So just wanted to take a moment to acknowledge that and congratulate Scarlett on her progress professionally. Also in that same vein, I also want to congratulate Jordan on the expanded role that he's been taking up. He did, again, originally join us as an administrative associate. However, he has now taken responsibility for a number of client relationships and has been doing very, very well with that. And he's also working on his CIM, which is Canadian Investment Manager designation, which is a robust portfolio management and investment management professional designation. And we wouldn't be complete if we didn't mention Kyle. Kyle continues to be a partner here and is managing many client relationships very, very successfully. Kyle has, as a reminder, has completed level 1 of his CFA, or Chartered Financial Analyst designation. As well, he has also completed the CIM, which is that Canadian Investment Manager course, Investment Manager designation. that Jordan is also working on. And over the last year, he has begun to make contributions to the investment management process here at Kluge Wealth Advisory Group. So there's been a lot of growth, a lot of expansion in roles. And for that, to reflecting that, as we go forward, most likely over the spring or summer, we will be looking at potentially adding a member to the team here, just to help take some of that administrative role away from Jordan and Scarlett, and let them really expand in their new roles. On that note, I did want to take a moment just to give our heartfelt thanks and acknowledgement to those of you who have entrusted us with extra business or referred us to a friend, family, or coworkers. Thank you very much. In this segment, we're going to go back to the basics a little bit and talk about the role of behavior in long-term investment and financial planning success. Now, Albert Einstein once remarked that compound interest is the eighth wonder of the world. Those who understand it earn it, and those who don't understand it pay it. Which begs the question, how do investors, on average, pay compound interest? Well, the answer there is through lower returns. And we know from the Delbar quantitative research study that investors consistently underperform their investments. Whether that's equity, fixed income, or any other asset category, investors underperform the investments that they own because of behavioral biases. And this is very, very important because it doesn't matter how good you are at picking investments. If your behavioral biases take over, it just doesn't matter. This is why preparation is so important in your long-term success. We have to have a plan for when times go well and have a plan for when times go badly. Even simple behaviors like rebalancing during tough times and rebalancing during good times has enormous impact on your long-term results. And this is why we focus so heavily on behavior here at the Kluge Wealth Advisory Group. Because human behavior is pretty constant. It's controllable, it's within our control, and it allows us to take advantage of other investors' behavioral biases to ensure that your financial plan and your portfolio are successful, ultimately so that you can live in alignment with your values, vision, and goals for the future. Now, getting into a market update here for January of 2026, let's touch on a couple of key highlights from the equity, fixed income, and commodities markets. Equity markets were broadly higher in January of 2026. Now, I am filming this on January 29th, so something dramatic may happen tomorrow on January 30th. But as it's standing now, both domestic and international markets are broadly higher. And this is good news. There is the old rule, which is the January effect, which basically states that as January goes, so does the year. So that portends well. In terms of interest rates, we did see market-based interest rates, such as the US 10-year, generally stay pretty steady over the course of the month. And in terms of the central banks, we saw the Bank of Canada announce that their key overnight interest rate is going to be held steady. And the US Federal Reserve did the same, keeping their key overnight interest rate steady. Now, broadly, commodities did have a good month. We saw price gains in oil, gold, silver, and a number of industrial commodities. All right. So in terms of a portfolio update, the bottom line is that in an absolute as well as relative sense, January was a pretty strong month for the portfolio. Again, something could happen tomorrow on January 30th, this being filmed on the 29th. But as we're filming today, this looks like it's been a pretty strong month. And a lot of that strength has been driven by our exposure to semiconductor stocks as well as materials. Now, over the course of the month, we did do our annual rebalance in January to get portfolios back into line in their asset allocation. So that was a major rebalance process there. And over the course of the month, we did get sell signals out of JP Morgan as well as Broadcom. So those assets were reinvested inside of the portfolio in other places. We also did take some profit from our semiconductor exposure by selling Micron Technologies. Micron was up about 80%, yes, 80% in a few short weeks. And given that we have a lot of exposure to semiconductors, it seemed like it made a lot of sense there to trim back some of that stock, given that explosive performance. We also sold some exposure that we had to precious metals, industrial metals, and silver through the XME ETF. Again, the parabolic move in those metals over the course of January, as well as some technical signals really prompted me to make that move. And we replaced that position in XME with a position in XLE, which is an energy ETF, and focusing on a lot of refiners as well as the large global E&P super majors. So again, though the XLE ETF appears to be breaking out, so we always want to be selling parabolic charts and be buying stuff that is breaking out. Typically, that's more often than not that is a good idea in terms of sector rotation. And of course, if you have any questions on this or anything else related to the portfolio, please give me a shout. We are here to get the job done and to answer any of your questions. Well, let's get into your frequently asked questions. And we'll start off the frequently asked questions section of this month's client video with what I jokingly call the TLDR, which is the too long didn't read, the condensed answers to the frequently asked questions that we've encountered in our client conversations over the course of the month. So that TLDR really breaks down to a couple of points. First is that, as we saw with the kerfuffle around Greenland and Davos, is that the US administration is falling into a fairly predictable behavioral pattern that is in alignment with their advertised strategic and geopolitical initiatives. So really, as we think about it, nothing surprising happened. Again, I always want to keep that in mind as we're digesting headlines, is that the US has several key strategic objectives they're trying to fulfill, and we know that Donald Trump has a playbook, and nothing we saw over the course of the last few weeks really fell outside of that. We don't have to like it, but it is ultimately the new normal. The second part we wanted to touch on, very simply, was just talking about outlook for 2026. Again, bottom line, believe that 2026 will be a good year. It is a US midterm election year, so we do expect some volatility at some point, because that is normal. But we have adjusted for that and to be prepared for that inside of the asset allocation, so that we'll be able to buy any fear events that come up that are related to the US election. So we'll get into more detail in the following segments, but that was your TLDR. Thank you. All right. Well, getting into your frequently asked questions here over the course of the month. I think number one, really, a lot of them really coalesced around a lot of geopolitical questions, just stemming from headlines coming from both Davos as well as the kerfuffle over Greenland. So one of the questions I did see quite a bit was, why is the US so interested in Greenland? So the reason the US is interested in Greenland is really for strategic purposes. It is mineral rich, although to be very frank, a lot of those minerals are trapped under ice and are really not accessible. Greenland's real value is just based on its geography. It's in a very, very optimal place to place missile defense installations because of the way intercontinental ballistic missiles have to fly. They have to hit their apex in and around Greenland. So if Russia or China were shooting intercontinental ballistic missiles at the United States, they would be at their apex and the most vulnerable point somewhere over Greenland. And so that's a great place to put a missile defense installation. The second reason is that there are Arctic shipping lanes that are used by both China and Russia quite frequently, and the US would want to have naval assets and other type of assets in the area so they could close or control those shipping lanes in the event of a conflict. So that's a well-telegraphed geostrategic reason to have those, to have control, at least of certain areas of Greenland. And again, the way Trump went about trying to get what he wants is typical Trump playbook. So it's we know we've seen this before with tariffs. We've seen this before with lots of other things. He's enacting his typical playbook here. So that was one comment we did want to talk about, is just sort of why Greenland was so important. The other thing I did want to note is that I think it's really important to sort of cutting some of the undercurrent of some of the questions we got, is that geopolitical events can spook the market. But they ultimately get evened out because unless you're talking about an event like World War II, you're ultimately going to see that markets, once the event dissipates, markets rebound and continue on their march higher. So we want to make sure that we always keep that in mind. Is I do have an index chart that actually points out every single major geopolitical event over the course of the last 100 years. And when you start zooming out like that, I will tell you that it's really hard to tell where these things land. And they are unpredictable. And that's just one of the risks we have to deal with and be prepared for, quite frankly. And if there's the opportunity to to buy on fear, and then we should. The other point I'd like to make as well, and hopefully this is useful, is that just noting that all great leaders of great powers, whether you're talking about Russia or you're talking about China or you're talking about the United States, they all live within enormous number of constraints. their behavior is very constrained. It is constrained by the political system. It is constrained by their geography. It is constrained by their economy. It is constrained by their demographics, and is constrained by their geopolitical goals. So although you can get a lot of bluff and bluster, a lot of heat, ultimately, the number of things that they can do is very limited. Now, everybody knows this, and those who can do more are going to be able to get more. But at the end of the day, everyone is constrained, and there's not a lot you can do to remove those constraints in the short term. So just always bear that in mind. I think it's useful to bear that in mind as you're reading geopolitical headlines. When you see a leader that wants to do something quite ambitious, whether you agree with it or not, again, if quite ambitious, understand that they are very likely constrained. And although they might be able to move in that direction, the chances of them getting everything they want are very low because of those constraints. So just something to keep in mind as you're digesting headlines, throughout the course of your news viewing. Thank you. Getting here to the second fairly frequently asked question over the course of January was just really regarding the outlook here for 2026. Now, as I can consult my crystal ball, there's a few things I'd like to bring up in terms of the outlook here. The first is that we are in a U.S. midterm election year, and typically you do see some volatility. That is historically normal, so we should expect it. And we've made adjustments inside of our asset allocation to be ready to buy any midterm election volatility. But that aside, I think really the underlying currents are very, very strong. You have a number of key positives that remain, irrespective of any normal historical patterns of volatility. The first is that the liquidity backdrop is very, very good. You see short-term interest rates have been dropping here over the last year and a half. And given that it takes a year to 2 years for interest rates to work their way through the economy, some of those interest rates that were made, say, back in 2024 are now just entering the system. And that means that liquidity will continue to rise, which is ultimately good for the results here as we go through 2026. Also, there are certain regulatory changes that are affecting the U.S. banking sector that will also increase liquidity. And so that's amongst a number of factors that we need to consider. Quantitative and technical studies all look good. Those are significant. I mean, they're not causal in and of themselves, but the fact that the patterns are lining up to past patterns of positive result, that's a good thing. And if you want to look at things from a little bit more fundamental lens, I mean, the U.S. economy is really starting to accelerate. The Atlanta Fed has Q4 GDP estimated at 5.4% real. That's 5.4% after inflation. If you put on recent inflation numbers, that's, believe it or not, close to 8%. That is going to be, if that continues to happen going forward, that is going to be very, very good for corporate, U.S. earnings, and that is in turn going to be very, very good for the stock market. Another thing that's also coincident, that's been getting a lot of headlines, that I think is also a positive tailwind because it's going to help the economy ultimately, has been this this decline we've seen over the last few weeks in the U.S. dollar. There is a very tight correlation between a decline in the U.S. dollar and increased U.S. economic activity. Now, it takes about 9 months to work its way through, but what this is saying is that sometime in the fall, we're in January, so sometime in the fall, in and around Election Day, U.S. economic indicators should turn up sharply. We have seen this in real time. The U.S. dollar did come under a lot of pressure in January and February last year, and we have seen U.S. economic indicators really accelerate in Q4 of last year of 2025. So, that's another tailwind there for us, something to bear in mind. So all those things are positive. So, I mean, really, we are looking, in any situation where we do see a dip, even a midterm election year dip, we want to be dip buyers. We're prepared for it. Of course, we're watching our dashboards and watching all of our risk management as we go forward if there are signs of a more substantial turn. But, the bottom line is there's a lot of tailwinds, a few headwinds, and we want to take advantage of those as they come up. So if you have other questions about the outlook for 2026 or anything else related to your financial life, of course, pick up the phone, give me a call. We're here to get the job done. So as we're wrapping up here, we did cover a lot in this month's video. We touched on some housekeeping items, especially around a CIRO data leak, RSP contribution deadlines, as well as the expected date for tax packages. We reintroduced and let you know about some of the professional development that's been going on under the surface here with the team. We gave a monthly market and portfolio update. We went back to the basics a little bit to talk about the role of behavior and long-term success. And then we touched on a few of your frequently asked questions around geopolitical events as well as an outlook for 2026. So would just say that if you have a question about anything we discussed here in the video or anything in your financial life, please pick up the phone, schedule a meeting, email us, be in touch any way you can. We are here to get the job done and are here to help. Thank you very much, and we look forward to talking to each and every one of you very soon.